Bitcoin ETFs versus Bitcoin Treasury companies, the epic battle for Wall Street's Bitcoin. If we look at the data, spot Bitcoin ETFs now manage over $150 billion in assets under management, roughly equivalent to around 6 to 7% of Bitcoin's total supply, depending a little bit on how you look at it and when you're watching this video. Meanwhile, public companies alone hold over 948,900 Bitcoin, representing around 4.5% of total supply. Now, this creates a super high stakes dynamic environment where ETFs provide the liquidity, the ease of use for institutional demand, as well as retail capital, and they're going to be the mainstream on-ramp to Bitcoin. Now, the corporate treasuries, these are a bit of a different style, more conviction. They're just going to be locking away coins for the long haul. It's also not fully clear how they plan to go about their business side of things, if they're going to be holding Bitcoin in cold storage, if they're going to be lending it, whatever they're going to be doing. We're not exactly clear on what kind of business model these treasury companies are going to have. But you can picture two giants, one and two. One moves the price through day-to-day inflows and then sentiment shifts. The other boots coins off the market entirely. And this is to tighten real-world supply and scarcity of the asset. They're playing two different games, but fighting over the same price ultimately. So the ETF flows versus the treasury lockups, it's more of a tale of liquidity versus scarcity, access versus conviction. And it's sort of just a story of modern day money in action. It depends what kind of investor you are. But they all have the same exact idea, which is the same idea you should probably be having, which is buy Bitcoin, the primary asset, because you can follow the money and do what they're doing, and that'll probably bring you the most returns. Think of it like the musical chairs game, where the chairs are removed faster than the amount of players that are in the game can sit. And if the music ends and you haven't found a seat yet, you're out of the game because you don't have a real seat. You may have thought you had a seat or had an IOU to a seat, but you didn't actually get your butt in a seat. Every new treasury allocation or ETF allocation shaves another chair off the floor for us. When demand spikes, only those who are seated in a chair and hold their real Bitcoin, they get the benefit, not the IOU from the centralized exchange you're holding your Bitcoin on. Illiquidity is not just a word. It's Bitcoin's own built-in intensifier. Because as the supply vanishes, the volatility is going to continue to increase. And the insiders are stacking seats while you sleep, while they sell you products so that you'll buy them instead of real Bitcoin. Do not get caught holding paper Bitcoin when the music stops. Hold majority in cold storage or hold a portion in cold storage.